Hello, everyone. My name is Nick Katko from BMA, and welcome to today's webinar, where we're going to talk about how to use lean practices to improve finance and accounting processes. Before we get started, I'd like to do the usual housekeeping and webinar issues. First thing I'd like to do is ask you a question. Can you hear me? Can you see me? Can you see my presentation? And if you can either respond in the chat panel and say yes, or in the question panel and say yes, I just need a few people to do that. Okay, great. That's sort of a little check I have to do. What we will do during the webinar is we will have a few polling questions, and you'll see when those polling questions come up, and I'll give you a few minutes to respond. Then I'll give you the answers. At the end of the webinar, you'll get a 5-question survey immediately when the webinar closes. Please, it'll take you probably about 30 seconds to complete the survey. It's very important to us that we make our webinars better through the use of these surveys. Finally, if you have any questions during the webinar, please type your question into the question pane. And at the end, I'll try to get to as many questions as possible. However, I'm not going to unmute anyone to ask the question. So let's get started. And another housekeeping issue. If you would like to download a copy of the presentation, go into your control panel and you'll see the presentation there, and you will be able to download it. All right, so let's get started. What are we going to do today? What I want you to learn today is how to identify waste in payables, receivables, month-end, and budgeting. I want you to be able to explain how basic lean methods and practices can be used to control the flow and improve accounting processes. How do you deploy and use lean performance measurements in accounting processes? And finally, who should be involved in improving accounting processes? Our agenda. I'm going to review lean for accounting, the principles and some of the practices. The reason I want to do this is because lean in the accounting function, and really lean in any office function, is a little bit different than lean in the traditional manufacturing sense. And I want to point out those differences because it really does matter how you apply the different tools and practices. Then we'll get very specific. How can we begin using some basic lean practices and methods to improve payables and receivables? How can we use those practices to improve month end and improve the budgeting process? Then we'll wrap things up. We could talk for hours about lean and how do you use it? What does it mean? And the purpose of this webinar is really just a basic introduction to how do you get started? How do you build awareness in the accounting function of what is lean? How do we begin some basic practices to learn? Lean is very much a learning process. There's a lot of doing involved, but the doing is related to learning. And it's about people learning how to think differently and understand processes and improve processes. So you have to start slowly and get people engaged. And if you remember that it's a learning process and you focus on the people, then it will work. But if you look at lean as something we must do, then you might miss out on the learning opportunities and it might confuse people. So let's look at the principles of lean for accounting and finance. First of all, lean is about improving the delivery of value to your customers. And accounting has a lot of customers, external and internal, and different value propositions. And so this is one thing that makes accounting or lean in accounting a little more complex than, for example, lean in a manufacturing setting where you're just building product and delivering it to customers. And we'll talk about this throughout the webinar. Compliance and quality are hallmarks of any accounting process. If you're looking at external customers, many times it's about meeting compliance requirements, whether it's GAAP, IFRS, SEC, IRS rules, and then the quality of the information. I mean, you know, it's sort of expected that accounting will produce quality information, whether it's for internal use or external use. And any questions about the quality, you know, questions, you know, how good is the accounting department? Third, on-time delivery. On-time delivery of the information when the customers need it and meeting those requirements. And finally, the fourth principle is fast processing time, that we want to deliver the value, maintain compliance and quality, be on time, but also fast. And this is how lean works, is that you have what appears to be maybe like conflicting principles. You know, how can we be fast and maintain quality? Well, we need to take a long time to close the books to make sure we comply and achieve the quality. Well, how can you do both? And that's really the challenge. And what lean does is it reveals problems and you solve those problems, you eliminate waste, you create more time and the ability to accomplish things like maintain compliance, maybe even improve quality and be faster in terms of delivering the value. So accounting, as I mentioned, has many customers and many value propositions. You have internal customers, you have departments, you have other groups of employees, you have some standard products. And what I mean by that is you deliver some routine information, routine reports, for example, the monthly internal financial statements. Then you have custom products. That might be someone calling up accounting or talking to accounting and asking for some kind of custom report or custom analysis. So it's a lot different, you know, and you have to be able to react and meet those needs and maintain compliance and quality. Another interesting aspect of accounting is that most of your internal customers are also suppliers of information into the accounting department. And that's a whole lot different than, for example, in manufacturing, where your suppliers are typically not your customers, that you have a supply chain. But in this case, the suppliers, which are initiating the information, are also the customers of the output. Then you have your external customers. These are the actual people that are customers that are paying you money for the products or the services. Owners, shareholders, other stakeholders, then all the legal and regulatory bodies that you have to report to. And again, they have different requirements of what they want and when they want it. So the job of accounting is quite complex. Many customers, many different needs, all need to be satisfied. And so that's one of the benefits of applying lean in the accounting function is you really study the processes and you ultimately get better delivering the value to all of your customers. So what's a value stream? Because we're going to be talking about the value streams in accounting. The best way to think about a value stream is that it's the actions taken in the proper sequence at the proper time to create value for a customer, and it includes the information to coordinate these actions. And a value stream, there's some input and there's some output. And in manufacturing, it is a customer order, and then you have to take that customer order, you actually produce the product, then you deliver the product to the customer. That's the idea of a value stream. Well, accounting has products, and your products are information, whether it be the financial statements or a custom report, and there's some input of information, and that information is transformed, and some value is created, and the output is delivered to the customer. There's some natural complexity in accounting value streams. First of all, the general types of value streams. And I like to characterize them sort of simply here. One is transactional. So the processing of transactions. And transactional value streams have short, predictable processing times for the most part. However, there's some inherent complexity, and the complexity is not known until the work begins, and the demand is fairly known. So if you think about accounts payable, we know about how fast we can process invoices. However, if we get an invoice that has a problem, we don't know it till we open up that invoice and begin trying to process it. So we can't predict the complexity in advance. And finally, we have a known demand pattern. For example, most companies send out invoices at a minimum at the end of the month. So you know that at the beginning of the next month, all these invoices come in, they have to be processed, we have to be paid. There's also periodic processes in accounting, which I like to think of as project-like, where there's a start and a finish. For example, month end. Month end doesn't go on all the time. It goes on for a short period of time at the beginning of the month. And what's interesting is that these periodic processes run concurrently with all of the transactional processes. And finally, span, what I like to call span. And one of the issues here, or it's not really an issue, but it's something to recognize, is the fact that every accounting value stream or every accounting process flow begins outside of the accounting department. It just happens to end up in accounting. That's the end of the process. And the true value streams really include some non-accounting employees. So that's one of the challenges here, is for the accounting function to bring the entire process together to understand problems and issues and improve the process. It cannot be done by the value stream alone. It has to be done by a team. So what are your typical accounting value streams? If you think about it from a transactional standpoint, procure to pay, order to cash, payroll. These are continuous processes. And I like to, as opposed to calling it payables and receivables, I like to think of it as procure to pay, because that takes into account the whole process, not just what the accounting department does. And then order to cash takes in that whole process, not just the piece that accounting does. And then you have even the payroll process, which ends up in accounting, but in terms of whether it's recording time or setting rates, things like that, that happens throughout the business. And then you have your periodic processes like month end, budgeting, capital purchasing, which is a process, and then the financial reporting and analysis. Now, there may be a few more value streams inside an accounting department that I have missed, but these are just sort of the basics. And really the point here is to understand which ones are transactional and continuous in nature, which ones are periodic and only occur at certain times. And another thing to recognize here is that depending on the size of your accounting staff, people can work in a transactional process, and if a periodic process is going on, they may also be working at that at the same time. For example, the best example is month end. So you might have people in payables that have daily processing responsibilities, but they also have month end responsibilities when month end is going on. So what you have now is you have staff people working in two processes at the same time. Now that typically doesn't happen in a manufacturing facility, because if you work on a certain line in the factory, that's the only line you work on. You physically have to move to another line. And so it's a little bit different here in terms of accounting than manufacturing. So what are the general 8 wastes that occur in accounting processes? And the idea here is to begin defining these for your staff and develop awareness, because lean practices are really about identifying problems and solving them. The conventional view of accounting, and accounting people do this quite well, is they fix problems. But what happens is these problems keep reappearing. Lean is about not just fixing the problem, but also then solving the root cause so that the problem doesn't occur any longer. So quality. The waste of quality in accounting is missing or incorrect information. The waste of rework is performing a process step more than one time. And many, many times, excuse me, a quality problem creates rework. Overproduction is unnecessary work steps. Inventory is any level of batch processing that results in a queue of work in the process. So there's inventory of work that has to be done in an accounting process. Overprocessing is adding more value than required by the customer. For example, over precision of numbers or reports that people really don't need. Waiting is any delay between process steps, meaning the work is waiting to be done. Not that people are waiting, but the work is waiting. Motion is the unnecessary movement of people. Transportation is handoffs of information between people, between systems. So those are the general wastes. We'll talk a little bit more specifically about these when we look at payables, receivables, month-end, and budgeting. The general improvement methodology for lean, and this is a cycle, and the objective is to build this into daily routine work for everyone in the accounting department. First, we want to measure the process, and we want the right measures so that we understand how the process is performing. Make the waste visible, meaning we're dealing with information, and most of this information is in computer systems. So how can we make the waste visible so everyone can see it? Meet often and learn about problems and issues. Set targets for improvement. Conduct the improvement events, measure the results, and sustain your improvements by changing your standard work. General lean performance measurements, and we'll get a little more specific later. But in general, these 5 areas of process performance is what we want to measure. We want to understand, are we improving the productivity, which is improving the output with our existing resources? Are we improving our on-time delivery? Are we reducing our defects? Are we reducing our costs over time? And are we reducing the processing time of the various value streams in accounting? And this combination of measures works very well to reveal problems and show improvement. So now we get to polling question number 1, and I need to open up the polling question. So I'm going to launch the poll. So which of the following is an example of an accounting value stream? So select one of the following. And I'm watching. We have about 40% of the people have voted. I'm going to wait till we get to about 100. Okay. So I'm going to close this poll and share the results. These were the results. All of these procured to pay, ordered to cash, month-end close are value streams, and all of the above was the correct answer. So let's move on. So let's talk about improving accounts receivable and accounts payable. The conventional way that accounting works is that we like to fix the problems that we see. It's part of what we do. From a lean viewpoint, that's half the problem, half the battle. The other piece is, from a lean viewpoint, is how do we prevent these problems that we find from occurring in the future? So we just don't want to fix the problem. We also want to figure out how to prevent it. And receivables and payables are mirror images of each other. And as I mentioned a few minutes ago, it's also best inside your accounting function to redefine these processes and understand the general flow. So for example, instead of accounts payable, we really want to talk about procure to pay, which starts with an initial input, for example, a purchase order, a check request, or maybe an expense reimbursement. So forms may be completed, maybe manually or in systems. There's review, there's approval, there's a lot of system transactions. The output is some level of a cash disbursement, and that's the procure to pay cycle. Order to cash is just the opposite, where an order is received from a customer. We input the order, we have operational transactions, we prepare an invoice, there's system transactions, we eventually get cash receipt. So it's really important inside the accounting department to define the entire process. Here's why. What are the typical defects that we find? Well, we have missing or incorrect information or missing terms: price, quantity, dates, payment terms. The incorrect product or service could have been delivered or received. The timing of the transaction between the supplier and the customer, if there's credits, if there's discounts, if there's the application of payments or refunds. Many times, the supplier and the customer, the timing of these transactions doesn't occur the same at both ends, which causes problems. And there's also missing approvals, whether it's an internal approval or approvals between suppliers and customers, or missing documentation. Then finally, there's what I call the attention-getting issues where, one party withholds a payment, or you put a customer on credit hold because they haven't been paying their bill, they haven't been paying their invoices, and the idea is to get attention. But if you think about all this information, all these possible defects, they don't all occur inside the accounting department. They occur somewhere in the process. And that's why it's important to look at things differently. Here's a typical current state of how a defect in payables or receivables is resolved, where accounting identifies the defect, then there's contacting the customer, the supplier, or maybe somebody internal, the process owner. What's the problem? You get an answer, you rework the process step, and finally you make the cash disbursement or process the cash receipt. All the while, the W's in yellow, there's a lot of waiting time in that process. You're sending emails, you're sending voicemails, you're waiting for responses. Many people get involved in this. And so the lead time, the total time to resolve a defect takes a long time, but the actual work time is very little. And this is what sort of the normal process is. People consider this part of their job. This whole process, though, from a lean viewpoint is waste. We would like to eliminate this process. We would like no defects. However, that's a goal. So what we want to do initially in the lean journey is how can we identify and resolve our defects faster? And the idea here is a daily management process where we make the defects visible on a board. We have a daily meeting of the process team where we're looking at the defects. And the idea here is we're trying to do some problem solving. We're also trying to do some learning and thinking, and maybe even identify the root cause and get the fix. And if we can't do it that way, we also want to separate flows, meaning if you're processing good transactions with no defects, you want to keep processing them and fix the problems in a separate process. So the idea is to establish a daily management routine and fix fast. If you bring the people together, as opposed to sending an email out and waiting for a response, if you set a daily board, you have a board that you update daily, and you have a daily meeting, and this meeting maybe only lasts 10, 15 minutes at the most. So the team comes together. Here are the defects that we have today in procure to pay. People may know exactly what's wrong and they can give you an answer right there and you can move on and process. If not, for example, someone in purchasing might say, oh yeah, I'll take that, I'll fix it, I'll get back to you tomorrow, I know what to do. And it moves a whole lot faster. So the idea here in an initial lean practice is really to eliminate the wait time and to learn about the problems and then put in solutions later to eliminate these problems. So this is a general template of a board where the defects are identified and posted, which defects are in process, which defects have been completed, and measuring what the defects are in terms of the defect rate and late payment, and then looking at Pareto analysis. What are the root causes? This is a daily meeting. It's cross-functional. It's for the whole procure to pay or order to cash process. What should you measure? We want to measure productivity, the percentage of time on error correction to total time. We want to measure the defect rate. What's the percentage of defective items processed over the total items processed, and cost would be late payment percentage. What percentage of late payments do we have to total payments on both procured to pay and order to cash? This is just a more detailed explanation of the productivity, where the numerator is the number of error correction items multiplied by the average time to correct. The denominator is the number of employees in the process times 40 hours a week. And the reason I wanted to show this is because we just want to get on the average time to correct. We're not trying to track actual time. We're just trying to get an average, because you have three of the 4 items are constant. The average time to correct is a constant, the number of employees is constant, and 40 is a constant. And so the variable that goes down is the number of error correction items, and that shows you how the productivity improves. So, polling question number 2. Let me open up the poll. Hold on one second. So, here is the question. Which of the following is not needed to begin improving payables or receivables? New managers, performance measurements, daily lean management practices, or a process team? We have about 20 seconds left to make your selections. All right, we'll close the poll. Let's share the results. And new managers is the correct answer. We don't need to replace managers to make improvements. We want performance measurements in place, we want daily lean practices in place, and we want a team in place. So let's continue. Let's move on to month end, one of every accounting department's favorite topics. As we mentioned earlier, improving month end is a periodic process. It runs concurrently with the transactional processes and other work activities. The conventional view of month end is that, well, we close, but we work a whole lot during the close period. I was working at a company last week. I asked them, we were talking about doing some training on lean in the accounting department. So I asked them, I said, how fast do you close? They said 3 days. I said, how much overtime do you work? They said, a lot of overtime. And they work approximately 12 hours a day over 3 days to close. Now, that's not really lean, okay? Because you're not really you're closing in 3 days, but the time you're working is a lot. So there's an opportunity here to understand where is the waste in month-end close and how can we improve it. What would the goal be for this company that I just explained? It would be, how can we close in 3 days in a normal 8-hour day? So what is the month-end waste in accounting? What is the waste in month-end? First of all, we have quality problems and rework problems, which really happen in the transaction processing, which we talked about earlier. If you have quality problems in transaction processing, payables and receivables, and maybe even payroll, and they don't get resolved quickly, sometimes they have a tendency to sort of have to be fixed during the month-end close cycle. So what we want to do is prevent that from happening. Overproduction, excessive review and analysis. Another way I like to state this is that the month-end process is like performing a mini audit every month end. It's that tedious in terms of making sure every number is correct and meets some level of an audit standard. Now, I'm not saying it shouldn't comply with GAAP, but I think there's a difference between compliance with GAAP and an audit standard. Inventory is batch processing, and it's performing activities during month end that could be performed more often. A lot of this has to do with looking at 30 days. If you're analyzing any account or any level of activity over a 30-day period, when you can actually be doing that analysis during the month, maybe on a weekly basis, then at the end of the month, you're only looking at the most, a week's worth of activities. Overprocessing is unnecessary precision in accruals and journal entries. We always wait for information at month end. That's not the fault of the accounting department, but within the business, people may have some information we need. And handoffs between process steps and systems in terms of transportation. So in general, what are some solutions? In terms of quality and rework, and this gets back to procure to pay and order to cash, resolve transactional errors at the source of the error or on a daily basis rather than waiting, and create some level of daily and weekly control versus month-end control. So anything you look at month end, you sort of have to ask yourself, can we do this more frequently during the month? The reason that this is advantageous is because it's easier to find the root cause the more frequently you look at something, and number two, the solution is often simpler and more apparent than if you wait. Overproduction is doing some level of analysis or activities from a customer or operational viewpoint and not a GAAP perspective. One example of a company that I worked with last year is we were looking at how to reduce month end, and one of the issues was the capitalization of equipment. And the policy in that department was we're going to wait till we get the invoice in. We know we purchased some equipment, and this wasn't major equipment. We purchased something that qualifies as a fixed asset, and we're waiting for the invoice so that we can capitalize it and begin depreciating it in that month, rather than let's just post the invoice when we get it and begin depreciating it in the month that we post the invoice, rather than trying to start the depreciation 1 month early. Now, yeah, there's some materiality issues that you have to consider here, but for the most part, what I said is it really doesn't matter if your depreciation starts 1 month later or not. Inventory is how can we do frequent balancing and posting, and the month-end work should be only for information available after month-end. Overprocessing, eliminate and reduce the unnecessary accruals and journal entries. Every journal entry should be looked at to determine if it's necessary or how can we eliminate it. If you're doing recurring accruals and reversals every month of the same types of expenses, that's something can we accrue at the beginning of the year and then simply post on an actual basis and then reverse and accrue again at the end of the year. We also want to frequently post to the general ledger, especially when it comes in from different systems. And we have to look at all the spreadsheets we use and understand whether we can eliminate some of these spreadsheets. What should we measure? Month end. Well, we want to measure the schedule attainment during the close period. So whatever time frame you want to close, you have to decide how frequently do we need to measure whether we're attaining the schedule. I would say a minimum would be daily, but should we do it more frequently? For example, maybe every 4 hours. We meet at lunch, right before lunch, and see how we're doing. We meet at the end of the day, see how we're doing. The purpose of schedule attainment is to understand problems and issues and understand how do we create short-term countermeasures to solve those problems. So the more variable your month end is, the more I would recommend meet more frequently to understand what's going on. Your quality measure, number of journal entries during the close period. We want that to go down over time. Your cost measure would be percentage of overtime. This could be in hours, even if your accounting staff is on salary. Just consider it your cost measure. And lead time is the overall reduction to close time. Create the daily huddle, which I talked about to understand schedule attainment. So we're talking about a 10-minute meeting at certain times during the day. We meet around the scheduling board, review where we are. If any person is behind, why are they behind? Are they going to be able to catch up or not? That's fine. If they can't catch up, what are we going to do? So let's open up polling question number 3. And so what is a poor example of improving month-end close? The accounting department working 2 14-hour days to close, visual daily close schedule, huddles around the close schedule board to discuss problems. So we have about 15 seconds left. Let's try to get your polls in, your answers in. Okay, let's close the poll, share the results. And everybody seems to understand what we're supposed to do at month end. So let's improve budgeting. Oh, before I move on, one thing about the closing month end, you only get to do it 12 times a year. And so it's important to put things in place and keep trying. You can't really practice month end during the month. So you have to really be thinking about, what are the problems and issues and how can we start moving things around and try things out. But if you have the measures in place, that's going to tell you the progress you're making. Budgeting, this is an opportunity. Nobody likes the budgeting process in any company, but we pretty much do it the same way. Budgeting takes a long time. From start to finish, it could be weeks, it could be months. That's the lead time. But the actual work time is probably days if you really were to study it and track it. So why does it take so long if it only takes days to do the work? It's full of waste. And from an accounting viewpoint, I think this is a great opportunity for accounting to assume a leadership role in how lean works in an organization, because this is a process nobody likes. And if you can begin to work with a team of people and make improvements, you will be a hero in the company, because you're going to make a process that nobody likes better and easier and simpler and less time. So what's the waste? Well, first of all, there's a lot of inaccurate assumptions. multiple rounds of budgeting back and forth. We submit something, we get it back, we have to change it, management reviews it, they send it back. Not defining the purpose of the budget up front. Too much detail by department, by expense, by line item, by month. Delay between processing steps, meaning we send stuff out, we wait for it to come back. Multiple budget meetings and multiple handoffs of information between different groups of people. A budget is really a set of assumptions. And so when you're looking to try to improve the budget process, I guess one general way to think about this is how can we have fewer assumptions? How can we have managers have to make fewer assumptions without some guidance from the leadership of the organization? And how can we meet and discuss these assumptions as opposed to just doing the budget? So for example, from a quality viewpoint, avoid the month-end line items, set realistic financial objectives. Here's an example. If the management of the company thinks that from a financial projection, costs need to increase no more than 5%, send that information out at the beginning of the budget process, saying that that's our goal and that's what you need to meet, as opposed to having management keep that a secret, have people develop these budgets, and then of course they're not anywhere near 5%, and then you get all this back and forth, how do we get it down to 5%? Rework, set the simple targets, only discuss exceptions. So continuing on this example, if you set a goal of 5% increase, you really only have to discuss with any manager if they want more than 5% and why. Eliminate actual to budget as a performance measurement tool. If managers are judged on how well they budget, meaning every month they're asked to explain actual to budget. How good am I budgeting? What assumptions am I making? This also leads to what I call padding the budget. So, I need to put everything I can in the budget so that I don't have to deal with the actual being over budget. Over processing, budget at the highest level of detail possible. Can you budget at the department level, not break it down for the year, not break it down by line item, by month, by department? Create a visual schedule and huddle meetings based on this schedule. Meet to discuss exceptions only and have lots of joint meetings. What should we measure? We want to measure on-time delivery per the schedule. Are the tasks being completed on time? If not, why not? Because if something is not completed on time early in the process, and if you don't catch up, then the whole process is going to be delayed. Set up the number of rework loops. So for example, we want to only do one review of the budget or maybe 2 reviews. Anything greater than that is a defect. We don't expect to get it right the first time, but we also don't want endless reviews back and forth. And overall, what should be the reduction in the budget cycle from start to stop? Much like we talked about at month end, create budget huddles. Now, this can be done, we might have a budget team that is looking at the overall process. Then within each function, you may want to have more frequent huddles. For example, when you're looking at the sales budget, that is sometimes a combination of the salespeople, sales management, and marketing coming up with what the budget is. So have a board, have a meeting, and are we making the progress that we need to make, and even put the measures there. Now, as I said, nobody likes budgeting. One aspect of budgeting is you only get to do it once a year. So it's hard to practice it, it's hard to improve it, as opposed to payables and receivables. So you have your current budgeting process. What I suggest is set an improvement target. Reduce the annual budgeting process time something, 50, 75%, 25%, something less than what it usually is. Everybody who works on a calendar year, you're going to be doing your budgeting sometime in the near future. Maybe you're going to be starting in September or October. So start doing this now in terms of putting a team together, setting the targets and the measures, and saying how much should we try to reduce budgeting for this year. And then there's the long term, where if you do any level of forecasting and you can do a rolling forecast on a monthly or quarterly basis, that's really where you want to go and eliminate the budgeting process, because the forecast process is all about assumptions. But what you're doing here is you are just using more accurate assumptions. If you ever want to learn more about budgeting, if you Google Beyond Budgeting, or Google the name of the person is Steve Player, Player. He's really one of the leading proponents of how to eliminate the budgeting process. So our final polling question. So which of the following is an example of a lean improvement to the budgeting process? Begin budgeting 6 months before year end. Stop budgeting line items by department by month. Have the accounting department prepare the budget with no input. All right, we got about 10 seconds, 10, 15 seconds left. And I'm gonna close the poll here, share the results. So yes, the correct answer is stop budgeting line items by department by month. We don't want to extend the budgeting process. We want to shrink it. And we don't want one accounting department to prepare the budget with no input either. So that's the polling question, and I just have a couple wrap-up slides. So the takeaway here is, how do we begin using lean practices in the accounting function? One is create measures so we can measure the process. That gives us a direction. Make the waste visible. That creates awareness. Then we get into the learning process. Talk about the measures, understand the waste by meeting and talking. This is about human beings using their minds to understand things. Set improvement targets, conduct improvement events, measure the results, and if you're making improvements, make sure you put standard work practices in place to sustain those improvements. So make the waste visible using visual management practices. Control and improve flow using daily and/or weekly management practices. Measure the process to learn about problems and issues and see improvement. And involve the entire process team, not just the accounting department. So I'm going to close the webinar here in a few minutes, and I'd like you'll get an immediate input in terms of completing the survey, please complete the survey. Again, I said it takes probably less than 30 seconds to complete, and then we'll move on. So if you want to learn more, you can visit our website. Please feel free to email me if you have any questions, and join our LinkedIn group if you have any interest in that. I don't see any questions, so thank you very much for attending this webinar, and I hope to see you soon. If you would like to get on our mailing list, go to our website, sign up for our mailing list for any other future blogs or any other future webinars. So thank you very much. For all of those who are in the United States, have a good 4th of July holiday. Bye-bye.